Today we're going to introduce a couple terms. One is called resistance, one is called support, and we're going to show how to use them to determine a little bit of price action and maybe possibly predict the way a stock's price is going to go. In light of the Ferguson incident, as well as with the heavy demand for the body cameras, we're going to look at a company called Taser International, which is the #1 supplier for the stun gun used by law enforcement, and their ticker symbol is TASR. They also provide a Axon body camera in which a lot of cities such as San Francisco, Winston-Salem, and even St. Louis are actually trying to use now. Many cities are jumping on board, such as New York and Chicago, to get body cameras for law officials. So let's go ahead and jump right in here, and we can see that this is a yearly chart. It goes back to December of last year. In the top left hand here, we have the ticker symbol Taser. You can see it's a 1-year daily chart. Taser is traded on the NASDAQ, and this is actually a TD Ameritrade brokerage firm, and we're using their Thinkorswim platform. It's a pretty well-known platform amongst investors, especially for technical analysis, and resistance and support are examples of technical analysis. So let's go ahead and jump right in here. So let's go back to let's go ahead and get our trend line drawing. So if we go back here to January, we can see that there was a top point here called at about $19. And if we look over at in March to April here, it's about the same amount, and even into mid-April. So a resistance is a top level and a support is a bottom level. So if we were to draw a trend line from this top point to this top point, it would be considered a resistance level. The same goes for support, which is a bottom, will go from this point to this point. So resistance is basically a price at which a stock is increasing to and it can't seem to break through, and it's either going to come back down or it might kind of just sit there for a little bit. This opposite goes for a support level, where it's where a price continues to go down and then it hits a price point where it kind of bounces off of, and it's going to sit there for a little bit. So if we look at the support level here, we can see that this was around the $15.84 to $16 range here, and then it bounced back up. So as the stock was going up, we're going to say, okay, this stock is going up. Maybe I missed the opportunity to get in. So let's see if it's going to come back down. So you can see here around February going into March, it starts to come back down a little bit. So now we're going to watch the stock to see, okay, is it going to come down to this $15.75 to $16 range? And of course you see it does, and then it bounces right back off. So once it comes to that range, you can either buy in and hope that the stock does well, or if some kind of negative news or anything is detrimental to the company, it might actually break through this resistance. Through this support level, and it'll continue to go negative. As you can see, it did it right here. It bounced up, it went up, it didn't break through that resistance level, and when it came down, whatever happened that day or with the company, you can see all these red lines here, and the stock came down even further. Now, resistance and support would be equivalent to Jello, so it's kind of like a semi-solid level, to where it's still solid, but it's weak enough to be broken through with enough pressure. Now, that pressure in the stock market could be any earnings news if a company didn't do well or exceeded expectations. It could be any market news, so let's say a merger happened, or a company has come up with a new product that is going to change the game. So anything like that, and that could have been something that happened about right here. Something that happened with the company. We can see that down here, these little symbols equate to earnings. So it could have been something with their earnings back then. We don't know. We're not looking at their fundamental data or financial data right now to tell. So let's go ahead and fast forward to present day time. So if we see around this time in the summer, just before the Ferguson incident in August, it was about at its lowest point, about $10 and something. So as we see here, as soon as we get to about the Fergus time here in August 8th, all of a sudden the stock kind of takes off. And that goes all the way through September. Well, that's because everybody was in favor of the body cameras being with police officers. So this company, of course, would be seeking to get new orders. Cities are jumping on to have their police wear them. So, of course, more orders means a higher bottom line or more money. So that company's stock price is going to go up. Now we see that it comes back down, so maybe the news kind of leveled off, and then the stock kind of comes down. Basically, the hype is wearing off a little bit. Maybe no new orders from companies are coming in, and then it takes back off. So we're going to take the same concept of resistance and support, and we're going to extend that for this new time frame since the Ferguson incident. Now, if resistance, we're looking for a top point to where a stock is at its peak. So if we look at the yearly chart, let's say we were looking at this in about here in October to November time frame, we'll say that this was the highest point that the stock was at for the past year, and that's at about $21. So we'll draw a line over here, and let's make sure that we're even. There we go. And so that's going to be our resistance line. Now we're going to look for a support line. And you see over here that the support line was similar to the resistance where it went from straight left to right. Well, a support level and resistance levels don't necessarily have to be straight left to right. They can be diagonal going up or diagonal going down. So for this one, we're going to go from this bottom point. We're going to connect the next point here, which was about in October time. And we're going to extrapolate and extend that line as well. So we can see that this is a straight line connecting 2 points. This is a straight line connecting or about to connect 2 points. We're looking to see if it's going to go to that point. And resistance and support levels can bounce off of numerous lines, as you can see here. This resistance had about 1, 2, and almost 3 points here. So it can be several points. Here's a mini one. I wouldn't really count that necessarily, but some people may. So to get back to it, we'll see. Okay, so now this stock has we've noticed that if we caught it at this time, we saw that okay, the stock was at about $10 to $11 here. It went up, it bounced off this little $14 range here. So the stock is, if it's going to come down, it's probably not going to come down any lower than like maybe $15 to $17 or so. So this may be a good buying time to come in because we see that there's like a mini resistance here, but we're expecting the stock to do well simply because of all the news with Ferguson going on. So now when the stock recently around Thanksgiving, it was around this $19 and all of a sudden the stock went up very well. It got to even up to the $21 range, and it was kind of fluctuating between $21 and $22 here. And then we had the Obama news this past week where he announced the federal funding for police initiatives, and 75 million of that is going for police to wear body cameras. Well, all of a sudden we saw that this resistance level that was forming here, the stock shot through it because of the news or that spark. And so a lot of investors made a lot of money going from this time frame, particularly if they bought back around this time. Whoever bought in mid-October, they made a nice $10 at one point where you see it went up here to 24.44. So this is a great example of how technical analysis can help you in your investing strategies. So if you see this company here, it's coming back down, and then it bounces off this 14 level range, you can estimate that the stock has potential to go up to $21, $22. And that's what happened here. And it's all going to be driving off of other forces. Company had earnings here. We don't know what this company's earnings is, but it is fairly well if you kind of do your research on it. But we can also use just this technical analysis to counteract that. So this little jello resistance line here, because of the Obama news, it broke through that resistance line and the stock is doing well. And now that resistance line is going to become a support line. So we're going to see now, is that company going to break back down through there? So you can use these elements as entry and exit points. And now if the stock is say if it's going up and it's reaching that $21 range and you bought in down here, you might want to sell because you don't want to risk it not going through and coming back down, and you don't want to lose any of the profits that you've gained.